Hi, and welcome to Route 664, The Road to Human Kindness. This is my weekly podcast from community newspapers. But recently, I started the Discovery 664 Academy for the public to join. We want to give you really usable information to unlock financial growth, and we want to help you with tax issues. All of this has to be done before year end. So by joining the Academy, you'll learn how to reduce your financial hazards, increase your income, and become an informed taxpayer. You can join today. Just go to discovery664academy.com or go to endowamerica.com and find out more about the Academy and how it can help you. We are always in a great discussion about tax planning and the issues that are facing our country today with regard to inflation and the national debt and the issues that we have with government supporting non-governmental organizations and building the debt to an even greater extent because they're overextended. They have been spending money on things that they're not really supposed to be spending it on, especially when you think about it. If you pay taxes and then they turn those into charitable gifts, why not make the charitable gifts directly? And that's what we're all about. We want people to recognize the power that they have in this economic environment to be able to save their taxes and turn them into something good for their community. And in the process, they lower their taxes and they increase their income, and they will have a very significant legacy that will be left behind. This is called the theory of social security, and it's based on a formula. The formula is that 664, a section of the tax code, equals double endowment, endowment squared. The endowment is twofold. It's the endowment that you build for yourself. This is the endowment that you're going to live on. This is the endowment that supports you. This is what endowment is. Endowment is support. And we intend to create endowment in this country to support everyone using charity. And that's a very interesting concept because you're not going to get the money from charity. You're going to get the money because you're going to be charitable. That's the bargain that the government gave us in 1969 when they created Section 664 of the tax code. Do something for charity when you pass, and we'll give you lower taxes while you're alive. Unfortunately, most people don't know that bargain exists. We want you to learn about that. We want you to become educated in that area, and that's one of the reasons why we started the Academy. The Discovery 664 Academy gives you a tremendous amount of information about social security, the theory of social security, the idea of being an economic citizen, the fact that we're in an economic world, and other very interesting details of how you can improve your financial well-being by eliminating financial hazards. We talk about 5 financial hazards. We talk about the 5 tax levels. Those are all things that you'll learn about at the Academy. I like formulas. I always have. When I was a baby, I guess I must have eaten formulas. But in any case, formulas have been around for a long time, and we use a formula in the theory of social security. My guest today is Tony Kasak. And Tony is a financial planner who also has a formula that he's worked out. Can you tell us about your formula?
Yeah, thank you for having me.
You bet.
My formula has to do with wealth management. And what it does is it allows you to look at your entire picture. So let me give you the formula. It's financial planning plus investment management plus relationship management. And when you add all of that together, you really look at the entire wealth management picture. So for example, in financial planning, you cover retirement planning, investment planning, insurance planning, estate planning, and income tax planning. But then in investment management is where you do all of your asset allocation and portfolio risk monitors, which ideally, to kind of back up you with where you're coming from with the endowment model,
Yes.
actually the best way that an individual can invest is to be like an endowment, like Harvard, like Yale, and get the rate of returns that those portfolios do by managing the risk the way that they do as well.
Why is it important for them to get return on their portfolio?
Well, a couple reasons. It's so important to maintain their current purchasing power. So at the end of the day, what we want the individual to be able to go still buy that gallon of milk in a year, or go buy those eggs in a year that they can still buy today without depleting all of their assets, so that they don't run out of money.
That's what I wanted to hear, that they don't run out of money. I think that's because one of the financial hazards that we talk about in the academy is the hazard of living too long. Most people wouldn't think that that was a hazard. Why is that a hazard?
That's a hazard because there's a couple ways. The market has done so well that it is enabled them to have wealth and they can get the health care that they need so that they can actually live longer and stay healthy. So I think the hazard part, if you will, is really getting them to a point to where they're managing the portfolio, getting the rate of return, and affording the proper health care to be able to maintain their standard of living.
So is running out of money an issue?
Well, it can be, absolutely. If you run out of money, then absolutely you kind of, games up, if you will. You don't want to. That's definitely a position you don't want to be in. And running out of money is a big concern for a lot of individuals these days who still are recovering from the great financial crisis of '08 and '09.
So a lot of people are relying on their Social Security for their support. A large number of people in the country, 50%, they say 50% of the people who are retired are living off their Social Security, and only the Social Security, because they haven't accumulated wealth, or they haven't accumulated an income producing asset. How do you handle that? How do you deal with that when somebody is suffering from inflation, where they're on a fixed income, they're not earning anything else, they don't have any other assets? What do you do?
Well, that's really not the best situation to be in. You want to really try to address these things many years before you get to the point of where you're just living on Social Security. It's kind of hard for someone like myself to really do something for someone that doesn't have extra assets to get a rate of return on.
So if they don't have assets, I mean, one of the things that's happening in the country, unfortunately, is home ownership has been diminished, has been dropping.
Yes.
And home ownership is very important to accumulating assets, because it's one of the best ways to accumulate an asset that has equity, that has a value. When you don't have that available, what is the springboard? How else do young people today, and my listener, John over here, he wants to know how he's going to be able to accumulate an asset. How does he do that without owning real estate, for example?
Well, I would say that today, one of the biggest things that someone can invest in is in themselves. And that is to learn something new. And, many years ago, someone would say, learn a skill or learn a trade, where today you can learn sales and apply that to a business. You can go out and learn how to market a business, and then you can then market yourself to be able to help business owners. So I really think for someone that is on a tight budget, the best investment would be in themselves right now.
So we train ambassadors, by the way, in the academy. The academy is designed to train endowment engineers, and we also train ambassadors. The reason we train ambassadors, we actually train people to be ambassadors, because becoming an ambassador enables them to have a public that trusts in them, to be able to give them information that is valuable to them with regard to their financial growth. And so when you're talking about becoming changing the way we view things and having something to sell, having a service to sell, how do you create something where you have the ability or the skill set to do service like that?
Well, for example, it depends on what you want to sell, but you're going to need to find a business that you can sell other people's products. So a low entry business is insurance sales or solar sales. These are business models that if you learn the skill of selling, you actually can go out and earn a much greater income selling someone else's product.
Is there other sales institutes where people can learn for free to become salespeople?
I follow certain people on Instagram that are in the sales training business. Something that is not free but is helped me many years ago was Sandler training. And that is a sales types of training that you could actually purchase. But as far as free resources, I would just Google or free sales, something along those lines on YouTube, so you could find something to watch and learn.
So selling, a lot of people have difficulty with that concept. Selling is unique in a sense. Some people are better at it than others. I think you need to have a certain mindset to be able to sell.
Yeah, mindset is key.
I remember when I started in the business all those years ago when I was doing what they call cold calling.
Yeah, dialing for dollars.
Yeah, I had graduated from University of Miami, and I immediately went into the disability insurance business and selling disability insurance. And it goes along with what you're saying. I was learning how to sell. I was a pre-med student, and I ended up going into the financial and the insurance world because my father was in the insurance business. But in any case, I went in as a disability specialist. I didn't know the first thing about disability insurance, but I learned about disability insurance and how it works and what the differences in contracts are and all the ways to interpret contracts. And I really became an expert in disability insurance. And then I was able to convert that to being able to discuss that with attorneys, with doctors and dentists and other professional people.
Yeah.
But the way that I got in front of them was to do cold calling, which is to sit on a telephone and just dial, like you say, dollars. But when you have success, of course, it makes it easier as you go along. The first time you have success, then you go, "Huh, this really works." So I do encourage people to do that, and I think that's also part of the learning process. We were very interested in having as many endowment engineers as we can create. We hope you'll become one by learning how to use these sections of the tax code that most people are not that familiar with. The ones that are dealing with charitable devices like the charitable gift annuities and child remainder trust and pooled income funds. Those are things that are really powerful. In fact, one of the first courses that we have right now on our academy is how to sell appreciated stock. Some things some people may not be aware of. So we're interested in your what is it that you think is the most important growth issue for young people with regard to their financial skills?
What do I think is the most difficult part for young people and their finances right now?
Yeah.
I think the most difficult part is living below your means right now. I think everyone I think in the younger generation right now, I think there's a lot of buying of things to appear a certain way, and maybe living below your means so you can actually put that money away into real estate or into the market would be a huge advantage for them if we could educate them to get them to do it younger, because when they reach their 30s and 40s, they're going to be like, oh my Lord, I can't believe I did all that.
Mm-hmm. They can accumulate quite a bit when they concentrate on it. Yeah. And the importance of that, so because there's been a lot of studies done, and they actually have, they're talking about how young people don't think that Social Security is going to be there when they get there, yet they still have to pay the tax today.
Yeah.
And they are bitter, frustrated, and they're uneasy about their long-term futures. That comes from 3 decades of polling regarding the way that young people view Social Security.
Mm-hmm.
So if Social Security is not going to be there, they're paying the tax for it. They're probably not. A lot of them may be living at home, right? So saving should be a no-brainer.
You would think.
Yeah, but they're hit all the time with consumption. So credit card debt has gone crazy.
Yeah.
Yeah, to whom do you think that is? Do you think that's, if I was to give you a choice, would you say that's to the people that are under 35, between 35 and 55, or the people over 55?
What, that have the most credit card debt?
Yeah.
I would probably say today it might be the 55 and older.
Really?
Maybe.
That's interesting. Yeah, because there's a study that I've just read the other day that was saying the majority of credit card debt today is falling on the shoulders of the 35 to 55-year-old.
Oh, really?
Yeah, because though they have a already established and probably have established a stream of income, they've been living on their income to the max.
Yes.
And so what's happened is now with inflation, they're actually short. Whatever they're short, they're making up for with the credit cards because they're not giving up their consumption.
Yeah.
So it's an interesting time that we're in, and I don't think that well, let's put it this way: the long-term planning of the country needs to get under control.
Oh, absolutely.
How do you talk to your clients about the debt, the national debt, and what the impact is on them?
So I don't really talk to them about that, okay, to be quite honest with you. I mean, do I take it into consideration when I'm looking at bond yields and where the interest rates are going and things along those lines? Yes. And credit quality. I mean, we don't know what's going to happen with the U.S. debt situation, right? I mean, we always seen that with the way things are looking, it's not looking too good. But my job, in my opinion, is to preserve my clients' assets based on the market conditions that we're in and where I think what I think market conditions are going to look like in the future. So, although that is a big situation, my main objective is making sure that I preserve my clients' wealth, depending on whether that is in the interest rate or equity markets, and then getting involved in capital appreciation is kind of like my strategy for my clients.
Okay, my guest is Tony Kossak. Am I saying that right? Tony Kossak?
Kossak, yes.
Okay, Tony Kossak and you're from Maryland, right?
No, I'm in Maryland.
Okay, and because we're broadcast all over the world, so anybody can get to anybody. That's the way it is today.
Awesome.
Yeah, so we hope that we'll help you. People will understand and know who you are and how you work and what your concerns are. And I thank you very much for joining us today on Route 664, the Road to Human Kindness. And that formula, give me that formula again, because we want to build on that.
It's wealth management formula equals financial planning plus investment management plus relationship management. So it's WMF plus FP plus IM plus RM.
Okay.
Got it.
Thank you.
All right. Well, listen, thanks
Tony.
a lot, guys. I really appreciate your time.
You bet. Thank you very much for joining us on Route 664, the Road to Human Kindness.
Hello. It's that time of year. Summertime. I'm Wanda Miles reminding you to visit us at endowamerica.com. We've got lots of books for you to take to the pool or barbecue side. Take them wherever you go with your favorite book. As long as you're comfy. It don't matter if it's digital. Ooh! Or a good old-fashioned, I gotta be touching my book. First on tap on our book list, we have worked up quite a bookshelf. Check them out. One of my favorites. Another one of my favorites. And yet another one of my favorites. I have so many favorites. I love them all. If you're looking for a great book to read, that, I don't know, kind of gets you comfortable with money. You should be comfortable with your money. Get reading, get cracking. Endowamerica.com, or buy the book at Amazon. You know where they are. Everybody knows where they are. Calling all financial professionals. Become a certified endowment engineer. Are you a financial advisor, accountant, or other professional looking to take your career to the next level? Consider becoming a certified endowment engineer with the Endow America Network Foundation. As an endowment engineer, you'll join an elite group of experts trained to help individuals and families maximize their charitable giving while minimizing their tax burden. You'll learn cutting-edge strategies for leveraging powerful charitable tools to resolve complex tax problems and unlock new philanthropic potential for your clients. Here's what becoming an endowment engineer can do for you. Expand your service offerings and revenue streams. Differentiate yourself from competitors. Attract new high net worth clients. Deepen relationships with existing clients. Gain recognition as a charitable giving expert. Make a bigger, positive impact on your community. The Endowment Engineer certification process involves intensive training and testing by qualified instructors. You'll learn to understand each client's unique relationships and financial circumstances, diagnose tax problems using specialized blueprints, design customized solutions using charitable devices, guide clients through the process of strategic giving. EndowAmerica.com. If you're ready to take your financial career to new heights while making a real difference, becoming an endowment engineer could be your perfect next step. Join this group of professionals and start unlocking the full potential of charitable giving for your clients. The future of philanthropy is in your hands. Join us. Our monthly membership fee of $49 includes certification as an endowment engineer and continued learning and support with weekly Q&A with EANF Endow America Network Foundation's president, Les Winston, and unlimited access to a growing community with an unparalleled wealth of knowledge. Becoming an endowment engineer could be your perfect next step. Join us. Visit us anytime at EndowAmerica.com.
Hi. Thanks for joining us today on Route 664, the Road to Human Kindness. And this is my podcast on Miami Community News. I want you to know that August 25th will be the 5th year. That's the 5th year anniversary of the podcast. I went back and checked, and we started this back in 2019 at a small radio station in Boca Raton. And before that, we did Funny Money. This is a love that I have, the sharing of what we're doing. I want to thank you so much for all of your support. I really do appreciate your interest in what we're doing. And I know that you have a lot of questions about this. We've gotten them over time. You've reached out for more information about social security and 664. And I know it's complicated. It sounds complicated. It's language that you haven't heard before. And so we wanted to make this more reasonable for you to understand. So we working in conjunction with the Endow America Network Foundation, we've created this academy for the public. This is an online academy for you to be able to join and become more knowledgeable about what we have been discussing for all these years, this 664 concept and social charity. So because it's online, you, the public, can engage with me and with the courses that we'll be offering. And you can join now, and it will help you before the end of the year with tax planning. We will have specific courses. There'll be 5 specific courses to start with on situations that you can use that are very useful. This information will help you unlock your financial growth, but it will also make you an informed taxpayer. You'll be able to avoid financial hazards that we talk about. You'll take advantage of the 5 tax levels, which ones are most suitable. And if you do all this before the end of the year, before December 31st, you have the opportunity to save taxes. So join the Academy. It's available to you now at discovery664academy.com, or go to endowamerica.com, endowamerica.com. I want to thank Tony Cossack for his interview this morning and the highlighting of problems that you have with creating not wealth, but income. And I want to talk about that briefly. Wealth is different than income. You can be asset rich and income poor. You can own 100,000 acres of land, but if they're not producing any income, it doesn't give you what you need in terms of your support. So income is very important. And we were talking about on the interview the idea of living too long, that's a hazard. That's a financial hazard. We call it a financial hazard because if you outlive your resources, if you outlive your income, that's where you run into difficulty. So Social Security is a form of a promised income. It is an endowment that was created by the government in 1934, where they said, you give us money each paycheck, and your employer is giving us money each paycheck, and we're going to put that into a fund, and then eventually you're going to get income from that, and that's going to be an endowment that you'll have for the rest of your life. And if you pass and you have children that are under age 18, your spouse can get paid the income. And after 65, same thing happens. There's a residual benefit to the spouse. However, what happens to that money if you don't have anybody that's going to get the income after you? The entire fund that you created, that entire endowment fund that was created at the government level, disappears, goes into the ether. The only thing that you get back is $255 to bury yourself with. They need to look at inflation on that number. So there's a difference in terms of what you can do with Social Security and Social Charity. Social Charity has a different kind of endowment. It's an endowment that you can create to any size that you want, and you can create it using non-cash assets, and you can use it in a favorably taxed way. And at the end of the day, when you do pass, that money gets left into the community as you see fit, where you want it to go. That's a big difference. That's a huge change. And I believe that that's one of the things that's going to help us get out of the situation that we're in right now with all this debt. We have to start to find ways to reduce government's expenses. And if there is an expense that they have created, that they're paying money to non-governmental organizations, which are charitable organizations, that should not happen. We should be supporting our own non-profit organizations in our community. My vision, the vision I have, is that every community, if it's endowed properly, because people have planned this endowment to be left behind, that endowment can be used to support a hospital, so everybody would have free medical services. It can be used to support an adult care facility. It can support child care, daycare centers. It can support schools. The point is that the community can support it by the community's own values, by the community's own resources, by its own asset wealth. Every community has enough asset wealth in it, if it is controlled to a certain degree, to be able to support those issues. It's not any different than taxation, but it's much more efficient. Let me scratch that. It is different than taxation. It is efficient. It is at a direct point where it's needed. It is not. There's very little waste in that when you do it that way, because you have an organization that's designed to run a hospital. That's what they do. They run the hospital, and that they get their money from the endowment. They don't have to worry about where the money is going to come from, because there's enough there to do it. We have that right now. I'm sure you've seen ads where Danny Thomas started the Shriners Hospital, the free hospital for kids to get care under the most terrible circumstances. It's run basically on contributions that it receives, but it also has a very sizable endowment. And that's a free hospital. And there's no reason why we can't have one of those in every single community. And that's true with these other services as well. So it's a different mindset. But in an economic world, in the economic world that we're living in, and it is an economic world, it's going to be based on what you have to offer, what somebody values what you have to offer.
You need to be individual, and you need to be able to strive for your own endowment support, and you can't rely on it coming from anywhere else. This is Route 664, the Road to Human Kindness. And of course, look at our network. Go to the Endow America Network at endowamerica.com, and you'll find the radio station. You'll find all the things that we've been working on to get the message out about 664 and social security. And join the Discovery 664 Academy. It will be a big help to you in the future in your financial growth.